Thursday, March 16th, 4:21 p.m. New York time, U.S. stock markets close. We'll go over the day trades as well as the top down of the S&P 500. So if you're swing trading, day trading, you have a perspective of how the S&P 500 is going right now to maybe give you some edge on the inside of price action. We're looking here at a monthly chart on the SPX. SPX is the cash index, the S&P 500. Cash index meaning it trades from 9:30 a.m. to 4 p.m. SPX. So for the current month, we're a red candle. Zoom in. We're still inside that range of the low this year and the high of this year. Here's the high of the year. Here's the low of the year. And we also have a lower high and a lower low than last month. Okay, so that's a retracement. That's what it is. And here is a demand zone, this gray horizontal line. We tested it and we're above it. We're inside this range, a little body. So we have a demand zone down here. We have a supply zone up here. Supply zones is often referred to as bearish bias, or demand zones down here, bullish bias. And when these prices, levels, zones get retested, they look for trade entries, depending if it reverses or breaks through. Also, we have this wedge. See these blue lines? Wedge. It's a wedge on the upside. It's getting tighter and tighter. Let's go take it to the weekly now. Here we are on the weekly. Yep. So last week, huge red candle, huge sell-off, huge trading range, huge body, very bearish. I drew a midpoint right there, that gray horizontal line. And then this week, we did break the low of last week, coming into this demand zone where prior buyers were. Look at that, prior buyers stepped in there. Buyer stepped in here again. Brought it up to test midpoint. We'll see how the end of the week goes, close of Friday, if we're going to close above or below or at this zone. Again, the momentum still is grinding downside. Take it to the daily. Again, we're closed today. We're closed already. So the price is not moving. For the day, well, look at this. We have this consolidation the last few days, labeled here in the gray area. And then we had this supply area up here, this gray area going horizontal. And today, we broke above it and closed above it. And also, we went to the midpoint of this daily candle. Okay. So what's this telling me? My interpretation is, let's just say, keep it simple, it's pumping up. Yep, they pumped it up today. Maybe we gap up tomorrow morning, or maybe we're just open up in the morning and go a little bit higher, and then we'll have that sell-off. Tomorrow's Friday. Very concerning how things may play out. Yep. Now let's go look at a day trade, a few day trades. The day trading is for my options that expire the same day. It's referred to zero DTE. So I have 4 grids here. On the right is the daily cash index, SPX. And this one is a 4-hour, but it's the S&P 500 futures, the continuous contract. So today, again, we tested midpoint of that. 4-hour candle yesterday went up, broke above this supply zone, and continued going up. And look where we are. Now, the futures are still open. That's why I see prices moving. They don't close to 5. So broke above here, went up here into another supply zone. So to my Patreon members, I mentioned this today. This was the price level of this supply zone. And I also mentioned this, gave these numbers as the supply zone too. Zoom in. This is a 15-minute with the SPX. See consolidation here. Breakout there on the 15-minute. And that breakout did not test that prior day's low, but the second green one tested, broke above prior day's low, went higher, and that 8 delta. Well, let's open this up so you can see some more. Let's open it up for 5 days. 5 trading days. There we go. 5 trading days. So today, I sat on my hands, waited, and I took a bullish trade here, right here. See that yellow arrow? That was my entry. It's at 10:36 a.m. And I went long. And the delta was 25 for my short strike. And I collected $1 per spread. It was 5 strikes wide. 5 point. Yeah. That green hour is where I closed it. It was a winner. My profit was 50%. That's what I put on. So close at 1049. That's good. I wasn't in that long. Well, thank goodness I didn't go short the 8 delta. These delta yellow horizontal lines is what I label at 9:30 a.m. New York time when the market opens. I label the call 8 delta and the put 8 delta. And that's where they are at 9:30. It says right there 9:30. The contract expires same day, 8 delta. So that got tested today. If you were short that one, well, you're hurting because it went above it. That was risky. Yeah. So that being said, look at the prior day. What my trade idea was here, got in early, took some heat, went down. I was still bullish, and I added more to it. And then they both went higher. Right there, closed it. Thank goodness, because it came down lower. And then later in the afternoon, broke above that prior day's low. That's another reason why I have these blue horizontal lines representing the prior day high, prior day low, so I can gauge where possibly things may be retested for reversals or breakthroughs. Okay, yesterday we broke above that daily low from here. And then this was the daily prior day's high. We busted above that. But it took a while, right? Because this morning, all this was occurring, each of these 15 minutes was occurring down here. Building consolidation, had the impulse move up, closed above, that's good. And then here, went right through. Very nice. Patience. Well, sometimes I don't use options. I just go outright and buy the contract. Now, this was Monday. That was a bad trade. Loser. Yep, I made donations. It's like paying taxes, but not getting your money back. That was a bad trade. I lost, but I got out fast. Yeah, so I got out here, this red candle, but I got out when I was down here, and then obviously continuing up. So thank goodness I got out of it. And then later in the day, sell-off. So my thought was, I got in here when we had that reversal. Bearish pin bar, broke above that red candle, went short, went against me. And shame on me, I stayed in too long. Should have closed as soon as we took out that high. I was thinking it's going to be a fake out. Nope, it wasn't. It actually closed there. And then that's when I got out as soon as it closed like that, which has to come out in the next minute here. We can see last Friday, look at that sell-off. That last Thursday sell-off. So if you understand what I'm saying, how we might have that pump and dump. So you don't see them here, really. Nope. But I'll show you an example. So we closed here on Monday. Red candle down here. And the next day, we opened here. Yeah, we did gap higher from that 15-minute one that closed at 4 p.m. and the one that opened up. But we didn't gap above the high of the day. That's a gap. Yep. Let me see if I can show you on the daily chart a few gaps. Here's a gap. Looking at daily candles. No price action between the close of one day and the open of the other day. Same here. Small gap. Close there and open there. No price action between those. That's the true gap. Or again, you can have a gap away from the close. Look at here. Gap away. But it still didn't gap lower than the low. Yeah. So those are some things I apply when I'm looking for my trades. I'm not having studies on it, none of that. Oh, down here. Now what I have to do is add these on for tomorrow. So that's a low of today. Adding this, maybe this doesn't help you, or maybe it helps a few people. So I'll show it. That's simply what I'm doing. Tomorrow's the 17th. Run it up to the 6th. There we go. This one bring back in. It's done. And right there. Friday high, label that. A high. Again, you don't have to use SPX. You can do this with any financial instrument, but I choose the S&P 500 because it has the best liquidity, best volume on an average day out of all financial instruments. Oops, change it to 1600. Yep, give an example of how it should be looking. Yep, add this a little bit more. Extend it out. There we go. There we go. I want to make sure it ends there. And add these two more, and that'd be ready for tomorrow. Yeah, I would say the second best equity index, hands down, would be the NASDAQ 100. Now I'm talking about equity indexes, not talking about your currencies, commodities, fixed income products. Nope. So that's why when I'm trading equities, indexes, I choose the S&P 500. That may include the futures contract or the outright cash on the index. And make it simple. Put a little even numbers. So when I adjust these will be adjusted tomorrow, but they're drawn now. So it's one less thing you have to do tomorrow. Again, my thought is we're going to either gap up tomorrow morning or open a little bit higher and then sell off sometimes. So I could take both sides of the trade because futures, I'd be trading before the market opens. When the market opens, I could be trading the cash indexes. We'll see how this plays out tomorrow. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.